Well, shares of Humana have been under significant pressure, catching several downgrades. The stock most recently dropping 26%, but our next guest believes now is the time to buy in. Let's bring in Lance Wilkes. He's Managing Director and Senior Research Analyst at Bernstein. Thanks so much for joining us, Lance. Maybe let's just start with the backstory, how Humana got into this position. For an audience that's Canadian, they might not be as familiar with the nuance of how Humana and the healthcare system works.
Yeah, I'll do that really briefly for you, and then happy to go more deeply into our thesis going forward. Really, Humana was confronted with two different issues. There were broad sector issues, but they hurt Humana much more than other companies because they're so concentrated in the Medicare Advantage program. That's the private program for people who are elderly in the U.S. for health insurance. And so what happened was we had a recovery in utilization in medical procedures that really hit in 23 and 24. We believe that was largely driven by an artificial compression of supply of, not enough people working at hospitals essentially during COVID, 21, 22, when there were big layoffs. And then we've now seen a ramping back up of payrolls. So we're back now at kind of trend line levels. That was unanticipated. So that hurt Humana a bit in 23. And then in 24, that was amplified by reductions in rates from the government for Medicare Advantage. And so Humana didn't anticipate the magnitude of utilization increase and the reduction in rates. And that, caused them to really cut their guidance in half for this year. So that was the first really big leg down in the stock that took place over, the first half of the year. The second thing that's happened over the last week or two is a more company-specific thing. There's a program called STARS, which is quality bonuses for companies. And so in Medicare Advantage, if you perform well on a bunch of quality metrics, the government gives you an incremental bonus. Those dollars have to go back to the consumer in the form of additional benefits. But traditionally, Humana has been about the strongest player in that space. About 94% of their members for this year were in 4-star or higher plans out of 5 stars. The information isn't finalized yet, but it was evidently leaked through the app that the government uses to let seniors see how many stars somebody has. Open enrollment for those seniors starts October 15th. Once that got leaked out, it became apparent that Humana was really dropping in stars. They did an 8K and announced they were dropping down to 25%. What that will do is their bonuses that they will receive in 2026 will be substantially lower, on the order of probably $1.5 billion, $1.8 billion less in pre-tax revenues as a result of that reduction. So that really puts pressure on the potential EPS in 26, and that was the cause of the about 27% decline in the stock early last week.
Now they said that they would appeal that, right? They said that they would appeal that. So is there a chance that some of that gets a lot better?
Yeah, and that's part of our thesis. We'd see being successful in an appeal as just being upside. That's not anything we're counting on. We'll probably find out in the next day or two what the final star ratings are, so if there's any correction there. And then last year, one of the big players, Elevance, which is a really big Blue Cross plan in the United States, was successful on an appeal, and they were able to get about 2/3 of their stars reduction improved. So it is possible. The other thing that is notable is with these big reductions in the past, Aetna, the number 3 player in this space, Humana's number 2, was able to fully reverse their stars decreases within a year. And so, typically these are things where there are very close cut points. You just fall below something, you invest more to fix, one particular metric. Maybe you move some people to a slightly different plan or something like that. And historically, companies have been able to return to a very high star rating pretty quickly.
You have been neutral on this stock for some time. In fact, it looks like this is the first time you're actually upgrading it, which is significant that you now see it as a buy. Talk to me about how it rebuilds, how it gets to your price target of $308. So there's some decent upside here. And as I said, for the first time you've seen in a while.
Yeah. This is a new thing for me, and historically I've been cautious on this Medicare Advantage space because I had thought that the operators in this segment had been more focused on growth than margin, and I was worried that this sort of thing, not so much the stars, but the deterioration in margin having to do with underpricing the business was eventually going to happen, and eventually it did, and largely that's because for the last decade, this has been a very fast growth segment, membership growing 8.5% a year, revenues maybe 12 to 15% a year, and lots of participants waded into this market, whether they were small or middling players, as well as these big guys. What's happened over the last maybe 3 years is you're starting to see a really significant pullback in competitors in this space. And with a couple bad years of margins, we're expecting this sector to become very attractive. It's basically the equivalent of a hardening price market. Obviously, don't want to talk about hurricanes and things like that, but in insurance, a lot of times after poor performance and margin is an attractive time to invest in that space. So really like the sector. For the company specifically, they have a new leadership, new CEO who came on July 1st. And this presents the opportunity for the company to really focus in on a turnaround, to narrow their scope, to get out of or have less focus on some of the diversification efforts they've been doing. And so presumably that could really help to drive incremental upside to our estimates. Our estimates are really around just fixing the pricing in this product. And our estimates, show a really nice increase in 2027. We think with some of these turnaround efforts, there's an opportunity to pull some of that forward. And then in addition, stock price is down 50%, so the valuation at this point is really compelling and could even attract takeover interest. Cigna had been rumored to look at the company last year.
Interesting. Lance, a lot to think about. Thanks so much for bringing that to us. That's Lance Wilkes joining us.